Welcome to the latest episode of the Financial Frontier. I'm your host, Patrick Camuso. I'm very excited to bring on a special guest today, Adam Blumberg, the co-founder of Interaxis, which is a educational platform for financial service professionals. So I'm very excited to get into the details of Adam's experiences today in Web3 as not only a financial services professional in this space, but someone that is advising other financial service professionals on how to get involved in Web3, how to learn about digital assets, and how to advise their clients on this. So if you're a CFP, a financial services professional, along with being a CPA, tax accountant, or tax professional, this episode is for you. So Adam, thanks for joining us today.
Thanks for having me on here, Patch. I really appreciate it.
Absolutely, absolutely. So to get started, why don't you tell us a little bit about yourself, your company, and how you got involved in Web3 and with digital assets?
Sure. Thanks, Patrick. I always love talking about it, partially because I was a financial advisor. So probably my second or third career, I sold an IT company in 2008. I got into financial services in 2009. And I had my own firm with my partner Ron for a while, and I got into went down that rabbit hole in 2017. I was one of those proverbial financial advisors that thought Bitcoin and crypto were kind of tulips, and I didn't understand them, and I wasn't going to invest in them or anything. And Ron kept pushing me on it, and finally I said, all right, let me just buy some, partially to shut him up and partially to see what it was about. So I bought some. I said, I don't even know how to do this. And he said, well, go download this app called Coinbase. And I had never even heard of Coinbase. So I went and checked it out, and there was Bitcoin, ETH, and Litecoin. Those are the only three you could buy. And I didn't buy Bitcoin because I didn't realize you could only buy fractions. So I bought ETH. It was about $200. At the time. I think I bought 5 of them and kind of wish I still had them. and they went up immediately. So I thought I was a genius. Still had no idea what I was doing. I went and bought Litecoin next because it was only $75, and it went up immediately. And I thought I would be retired within a year. And then Ron said, "Do you realize there are thousands of these?" I was like, "You've got to be kidding me." So he introduced me to Bittrex and Binance, which had all these tokens that you could change or you could trade, and they were going up and down, and there were Telegram groups and all that. And I still had no idea what they were, but I just knew that you could trade them, and the theory was you can make money. Of course, I didn't, because no one really makes money trading. So that honestly, understanding, Patrick, or seeing that there were so many of them, and there was so much value being moved, I said I have to find out what this is. And so I went and did searches, and knew, like, kind of tangentially, that there was this idea of something called blockchain, but didn't know how it fit with Bitcoin and crypto. So I had to go down those rabbit holes, kind of without the education we have today, right? So back in 2017, if you remember, it was a lot of there was some vague kind of YouTube talks about it, but there wasn't a whole lot. We didn't quite understand the value of it. There was some libertarians talking about it. There were some hardcore crypto people going into way too much technical detail. There were white papers, but none of it was just really hard to wade through. But I had to, because it reminded me so much of the early days of the internet.
Yep.
And that's kind of what got me excited. Was I was an adult for the entirety of the growth of the internet, between college and my working career. I saw the internet move up and down, and I saw the growth of the internet. And so I said, I want to be a part of this. This is in the exact same stage as, like, the internet was when I was in college. I want to be a part of it. And I feel like I understand it because of my understanding of financial services. So all of that to say, in 2020 or 2019, we launched a YouTube channel. In 2020, we launched Interaxis, sold the RIA, and started teaching crypto, blockchain, Bitcoin to financial advisors. And now we have, our courses, we have a newsletter, we have a podcast, we about to launch a community for those financial professionals to not only learn about it, but figure out how to implement it, how to talk to clients about it, what's coming next, how is this going to impact my practice, how is this going to impact financial services? Because, as you know, it goes well beyond just, should I invest in Bitcoin or not?
Absolutely. And it sounds like, you went on that similar journey to a lot of people that were, navigating this space just with the tools and education available at the time, which back then, wasn't that much. And I see that journey, in my own personal journey, as well as many investors when I'm doing their, accounting cleanups for when they first got involved in crypto. Starts on Coinbase with one of the major assets, and then it quickly becomes, a very large portfolio, usually, over allocated to too many altcoins. And then over time, you start to learn the market Welcome to the latest episode.
How it fit with Bitcoin and crypto. So I had to go down those rabbit holes kind of without the education we have today, right? So back in 2017, if you remember, it was a lot of, there was some vague kind of YouTube talks about it, but there wasn't a whole lot. We didn't quite understand the value of it. There was some, libertarians talking about it. There were some hardcore crypto people going into way too much technical detail. There were white papers, but none of it was just really hard to wade through, but I had to, because it reminded me so much of the early days of the internet.
Yeah.
And that's kind of what got me excited. Was I was an adult for the entirety of the growth of the internet, between college and my working career. I saw the internet move up and down, and I saw the growth of the internet. And so I said, I want to be a part of this. This is in the exact same stage as like the internet was when I was in college. I want to be a part of it. And I feel like I understand it because of my understanding of financial services. So all of that to say, in 2020 or 2019, we launched a YouTube channel. In 2020, we launched Interaxis, sold the RIA, and started teaching crypto, blockchain, Bitcoin to financial advisors. And now we have, our courses, we have a newsletter, we have a podcast, we about to launch a community for those financial professionals to not only learn about it, but figure out how to implement it, how to talk to clients about it, what's coming next, how is this going to impact my practice, how is this going to impact financial services? Because as you know, it goes well beyond just, should I invest in Bitcoin or not?
Absolutely. And it sounds like, you went on that similar journey to a lot of people that were, navigating this space just with the tools and education available at the time, which back then, wasn't that much. And I see that journey, in my own personal journey, as well as many investors when I'm doing their, accounting cleanups for when they first got involved in crypto. Starts on Coinbase with one of the major assets, and then it quickly becomes, a very large portfolio, usually, over allocated to too many altcoins. And then over time, you start to learn the market better and consolidate yourself into more of a practical portfolio. That is like one of the trends that I see. So as someone that has sort of like, personally navigated the space, and now you're working with financial professionals, are there any sort of like initial hurdles or roadblocks or misconceptions that you consistently see in either like your own thought patterns, or also like all these other professionals that you're dealing with? Are there any sort of themes that you're seeing?
Yeah, look, one of the biggest issues we see, of course, from financial advisors and many other people, as you know, is where's the value? Why does Bitcoin have value? Why do these other crypto assets have any value? They're totally made up out of thin air. And, like this morning when I gave a talk to a bunch of physicians about crypto, again, not trying to get them to buy, but just explaining to them how crypto, blockchain, Web3 will work. One of the guys said, well, it has no value. It's completely made up. It's digital. It doesn't have anything backing it. And I said, well, so does the dollar. And you've been using that for your whole life. It has nothing backing it except the full faith and credit of the US government. And to me, that full faith and credit is kind of going away. But that's an aside. But that kind of idea that it's made up, the value is made up, and yet everything I'm using is not, right? Everything I use in traditional finance is not made up. And then to be able to go, well, you're kind of using a made up currency as well. Then, another misconception we get is there's the crypto asset class, and this very well. Bitcoin has a very different valuation, investment thesis than does ETH, than does some others like Solana or Aave or Uniswap or anything else. There's not a winner take all, in my opinion. They can all coexist. You can invest in gold and Microsoft and Amazon, just like you can invest in Bitcoin and ETH and Solana. It's okay. They're different. They have different valuation. They have different issuance policies and different reasons why some sort of adoption or use case contributes to the value of the asset. So I think those are probably two of the biggest misconceptions I see. One, it has no value because it's made up. And two, there's going to be only one winner.
Absolutely. And then when you're looking at this from the perspective of a financial advisor, and maybe talking to more of a traditional, more conservative group of investors that like physicians, for example, what type of allocations do you think are reasonable for them to start contemplating in terms of, an allocation to their portfolio? And also then, how are you sort of like seeing advisors help them manage their expectations in regards to the validity that they could potentially expect with, some of these assets?
Look, if I'm, and I'm not a financial advisor anymore, so I don't really give advice on how much to allocate. I tell advisors, look, for most people, it's probably 1 to 5%, obviously based on their risk profile, based on their liquidity needs. That's a big one, because although Bitcoin is the most liquid asset that's ever been created, it's also volatile, right? So if you need the money tomorrow, then you probably can't invest in it today. And think that, oh, it's going to go up 5% and I'm going to have that much more tomorrow to pay my bills. No, you have the liquidity needs, you have a risk profile. It's somewhat based on whatever vehicle you're going to put it in, whether it's a retirement vehicle or something. But I tell them, look, 1 to 5% is good, because if it goes down 50%, it's not going to make a tremendous dent in their portfolio. If it goes up 50%, awesome. You can decide at that point whether you're going to rebalance or maintain that investment in there. So I'm generally in the 1 to 5%. And part of that is the volatility. Part of that is you still need to understand how you're holding it. There's still custodial issues and technical risks and of course, regulatory risks. Some of those have been allayed recently, but there's still regulatory risks there. So overall, I'd count, for most people, I would say like maybe 1 to 5%. With those that are younger and decent earners, probably on the higher end of that. Those that are more risk averse, those that can't handle the downturns or anything, on the lower end.
Absolutely. I think that's a great point you bring up. It is an extremely liquid asset class, but also very volatile, which sort of, work against each other if you have a short-term time frame. So I think having a longer-term time frame is extremely important. And probably for someone more traditional, just getting involved, like you said, a smaller allocation makes more sense until, you start to sort of bridge that learning gap, which is the big issue, even for me as a CPA and tax professional, just educating individuals on the tax side of things. And I believe it's sort of the same thing for financial advisors, is educating their clients on digital assets, on Bitcoin. And for you, you're taking that a step further and educating financial advisors on this. So have you seen perceptions change at all since the news has come out with the ETFs? And has that done anything, for your business and for your industry at all?
Well, obviously, yeah. I mean, it's a tremendous amount of validity, right? This is now an asset class that we can invest in. It's taken away the reputational risk or a lot of the liability to putting clients into some sort of Bitcoin exposure, because that kind of, I'll say, blessing of the SEC. As we know, when Chair Gensler and the SEC approved the ETF, they specifically said, we're not endorsing Bitcoin. But what it tells the whole industry, what it tells especially investment advisors, is it's kind of okay, right? You're not going to get in trouble for putting clients into Bitcoin anymore, assuming it's part of according to your fiduciary duty, assuming it's part of the risk profile and everything else I said before. But yes, there is definitely more uptick in interest. There are because now, as the ETF sits on platforms like Schwab and Fidelity that advisors have access to, they have the ability to put clients into some sort of Bitcoin exposure. And so they got to know about it. Now they're interested. In the past, even if their clients asked about it, they might go, well, I can't put it in your IRA, so we can't really talk about it. That's where a majority of your assets are. So I can't put it in there. But now I can with the ETF, so I better learn about Bitcoin. And that kind of sends them down rabbit holes. And also, Patrick, when it's not like it's crypto companies only that are managing the ETFs, it's monsters of traditional finance, BlackRock, Fidelity, Franklin Templeton, all multi-trillion dollar companies that have said, not only do we want to be involved in this, but BlackRock talks about tokenization, and Larry Fink says this is the first step. Fidelity has been custodying Bitcoin since 2013 and ETH since like 2020. So or 2022, I think they started custodying ETH. They've been mining Bitcoin. Franklin Templeton is operating validator nodes and mining Bitcoin. So these aren't companies that are just doing it for FOMO or just to earn some money on the fees, because quite honestly, their fees are ridiculously low. This is companies, huge companies going, this is viable. We need to be a part of this. And the ETF is just the beginning. So yes, to answer your question, of course, in a very long-winded way, which I tend to do, there is definitely more interest from advisors now, because now it's okay for them to talk to their clients about it.
Absolutely. I think, like you said, the ETF is just a huge stamp of approval and really just the beginning of adoption at the institutional level. And it's just going to really benefit everybody industry-wide. So, like, what percentage, or like, just roughly speaking, like, if we were going to look at all finance professionals, all CFPs, like, how many of them really have Bitcoin and digital assets on their mind? Because I can, say for the most part on, the accountant side, it's still a very small percentage. And sometimes that's hard to realize because we're just so far in the weeds in it all day. But what's your perspective on that?
It's still, in my opinion, a minuscule percentage. And again, that goes back to that reputational risk. That goes back to look, if the ETFs had not been approved, we know the price would have gone way down and there would be virtually no interest. It'd be a bunch of advisors going, see, this is never going to be a kind of mainstream thing. We're never going to get that institutional adoption you wanted. It was approved. So just now, and it's been barely over a month, that we've really seen this uptick. And you probably saw even the, I think it was Bitwise and Vetify that had their report out that as of, not very long ago, as of maybe like 2 months ago, only 39% of advisors expected the ETFs to be approved. Mm-hmm. Right. So you and I are so ingrained in it every day that, like, I was 99% sure they were getting approved. But only 39% of advisors, that means to me they weren't paying attention all that much. Not in a bad way. Look, financial advisors have 100,000 arrows in their quiver. So I understand not up to this point wanting to be super involved with crypto, because it's a huge learning curve to understand Bitcoin and crypto and wallets and custody and protocols. And oh my gosh, there's a multi-billion-dollar protocol that literally isn't run by a person. It's run by a group of decentralized people. That's crazy talk. But so I totally get the fact that up until now, there hasn't been that much interest in learning about it, because while a lot of investors have some money in it, it's not significant enough to move the needle for advisors, because again, super steep learning curve, a lot of liability, not a real good way to get E&O insurance to cover it, not a real good way to put it in client portfolios, maybe 1% to 5%. And if I'm charging 1% on a client portfolio, that means that's a minuscule hit. That's a minuscule amount of my AUM fee. Why am I going to invest any time and money in it again? So that I can take the risk? The only way I'm going to do that if I'm the advisor is I'm really young and I need to have a niche, and my niche might be crypto investors. Or I have a few clients already that are super into crypto or work for crypto companies or something, and I have to learn about it. So that's why the number has been really small so far. And I've been very adamant about, those that are, the kind of crypto bros and crypto heads that say, if your financial advisor doesn't put you in Bitcoin, you should fire them. And my answer is no, that's not acceptable, because financial advisors have so many other things to worry about, so much liability, their fiduciary duty, they have to take a risk profile into account. Plus, as I've said, Bitcoin and crypto are not available on most custodial platforms, which means they're not available to most reporting platforms up till now. It's not an easy lift. So even if an advisor understands it, putting clients into it is a huge task for a very small allocation. So now, again, we're getting to the point where it's really easy now with the ETF to get that exposure. So now is the time to start learning about it and understanding it. And as you know, once you get into it, especially if you're an advisor, it's totally mind-opening as to how the financial system works, how the economic system works, what money really means, where value comes from, and where that might be going in the future. And if those advisors, once they can kind of get out of their own head of here's how we've always done things, to go, oh, this is different, like custody can be different. And the value of Bitcoin doesn't have to be based on a physical asset. And the value of ETH can be ETH can have value even though it doesn't have cash flows and it doesn't have equity and give me the rights to the profits of the company or something. That's mind blowing. But once they can get past that, it's, you can see the light bulbs start going off and they go, oh, this is going to change things, right?
Absolutely. There's a huge learning curve. And it's still, like you said, when you're in the trenches of this every day, we still overlook sometimes when we're seeing all this progress, how much of a niche asset class and just an emerging asset class that this really is. And like you said, that's why the ETFs are such a big step, because it is a much easier way that people can start getting some exposure. And hopefully, some of the younger financial professionals that maybe have these niche clients and start to be early adopters of this, hopefully it can benefit their career exponentially over a longer time frame if Bitcoin and other assets continue to take over more market share. Obviously that's why tax professionals and CFPs are sort of choosing this niche. Like you said, it's usually going to be people that are younger themselves and targeting younger groups of clients, because that is who just inherently clears a lot of these learning curves of understanding the value of a fully digital intangible asset in a lot of cases. So I do think that's interesting. So the learning curve is huge, as you said. What are some of the best resources or starting points that you would recommend to a financial advisor if you're speaking to someone that's trying to go from 0 to 1 in their understanding with their financial background? What are some of the recommendations you would give them?
Well, obviously, look, I'm going to be biased. We teach courses specifically for financial advisors. So we have a certified digital asset advisor course, which takes people all the way from, here's an important point, Patrick, why Bitcoin exists. Why was it even created? Because if you can get through the why, that helps a lot with the what and the how and why does it have value. So we talk about why, how Bitcoin and blockchains work, Ethereum, smart contracts, wallets, custody. We go through all that. And then, of course, we have shorter courses that are just about Bitcoin or just about smart contracts or just about custody. So I'm going to be super biased and say, you can go to interaccess.io and find those things, follow our newsletter, follow us LinkedIn, Twitter, wherever that we're posting about this. We're teaching it all the time. We have a YouTube channel, the Interaccess YouTube channel, that we talk about it all the time, and we're just explaining it. We're not, as you've seen if you're watching this or heard if you're listening to this. I don't expect everybody to invest in this. I don't expect everyone to put all their money into it. I don't expect everyone to drop what they're doing in their practice and learn about this. It's, if you have clients that are interested and you want to understand how to make this a part of your practice, why it has value, want to be part of the conversation, we can help you out. There are other resources to help you out, so that you learn it the right way, so that you don't, so that you're not necessarily overly biased towards a certain product, so that you can make the decision for how it fits into your practice, how it fits with your clients, how to have conversations with your clients, because your clients might be, elderly, like near retirement or in retirement. Your clients might be young tech entrepreneurs. Your clients might be, 30s and 40s professionals. And based on who your clientele is, you need to kind of learn it in a different way and have different conversations about it. So again, very long-winded answer to a very short question that should have ended with go to interaccess.io and we'll teach you about it.
Absolutely. I think you guys do a great job at Interaccess. I'm part of your newsletter, and I think that aspect of the newsletter and the YouTube channel gives you exactly what you need in terms of that timely, up-to-date information that you can get week to week. And then it's also important if you're a financial advisor and you're getting into this space, because I think this is true if you're on the tax side or the finance side, you need that deep fundamental understanding, starting with Bitcoin, moving to Ethereum and smart contracts, and going from there. And that's what I believe you guys provide with your courses. And that combination is really what it takes if you're any type of professional in this space. You need that fundamental understanding, and then you also need to stay up to date on information in this space because it is moving so quickly, and it's only going to increase now as we sort of enter this potentially new cycle like we're seeing here. So I also, encourage people to go to check out Interaxis, sign up for their newsletter, sign up for their courses. It is a great resource. And from my perspective, you want to learn from people that are in the trenches and involved with this on a daily basis, that are sort of living and breathing this like I know Adam and his team are. So what is your outlook on the rest of the year when it comes to the markets, Adam? We've seen the Bitcoin ETF. Obviously, there's a lot of talk of an Ethereum ETF. Some think it will go past that. Some think it's unlikely. Where do you see things going, and sort of, what's your perspective on this year? You can keep it general. You don't have to make any deep predictions, but just overall, like, where's your mind at with everything?
Yeah. So I don't make any like price predictions or anything like that. I think, I look to the data and the numbers and the theories behind it, right? So if we just look at something like Bitcoin, the halving is coming up in April, which means that the amount of new supply is going to get cut in half. There's more demand for Bitcoin through the ETFs. And keep in mind, many platforms haven't even put the ETFs on their platform yet. So advisors don't even have access yet. So we're not even close, and every one of these ETFs is breaking records already in terms of inflows. So we have increased demand, lower supply, and if anyone has ever taken any sort of economics course, you know that increased demand, lower supply should equal price go up. I'm not telling you it will. I'm telling you logically what should happen. I think there will be an ETH ETF. I think May 23rd is the drop dead date that the SEC has to make a approve or deny decision for one of it. It might be BlackRock. I don't remember which one, but kind of like with Bitcoin, I think they're going to say yes to everyone who's applied. And we've already seen Fidelity apply, ARK, Bitwise, all of those have applied. So I think there'll be an ETH ETF mid-year, because I don't think the SEC has legs to stand on in denying. And even if they did, they'd get sued. And in an election year, I don't think the administration is going to let the SEC be an issue, right? Especially not the SEC on an issue as trivial as whether or not there's an ETF for Ethereum.
Which is, so I think that'll be inevitable. Yeah.
I think there'll be an ETH ETF. I think that we'll get like a 50-50, Bitcoin ETH ETF. I think we'll get some of those, or some actively managed that are around that. And I think that'll be the end of the crypto asset ETF, the different crypto assets that go into ETFs. I think there'll be several flavors of them, but I think that'll be the end of the different assets for at least a couple of years. But that will totally open the floodgates, right, to the investment. And hopefully what that does is it gets more people learning about it, which sends them down these rabbit holes of like, oh, should I invest via the ETF, or should I just have spot, or should I just own spot? Should I own, what does custody look like? Why is it different? Someone asked me this morning, why would I own the ETF over just owning Bitcoin? I said, okay, let's have that discussion. I'm not telling you which is better. We have to have the discussion, and I have to go with go with whichever is best for my practice, whichever is best for my clients. If most of my clients are in IRAs, retirement accounts, the ETF might be better. It's really easy to plop it in there, reporting and all that. If most of my clients are young and this is outside of their tax deferred accounts, then maybe spot Bitcoin or ETH is better. And I got to figure out what custodians to use. So, I think that's where we are in terms of regulation. It seems like there'll be some stablecoin regulation coming soon. I think that would be wildly helpful. I love talking about use cases and adoption even more than I like talking about prices and putting it in portfolios, because I think the use cases and adoption are what drive the value eventually. Right now, it's a lot of speculation. It's a lot of, or is this going to go into an ETF versus are people going to use this? And therefore, is there demand for ETH because more people are using the Ethereum blockchain to process their mileage plus frequent flyer program on top of Ethereum, right? So I think that's where we're going to see so many more actual use cases. We're probably going to see a lot more tokenization of assets. Larry Fink has already talked about it. This well, more and more companies are looking at that, whether it's real estate or private funds. I think we're going to see a time in the near future where more people, whether it's advisors or anyone else, is going to understand the adoption of Web3 and crypto a lot better than they do now, and realize it's not just about owning Bitcoin and ETH in a portfolio.
Absolutely. I think it's all about use cases and emerging sectors, like you said. Are there any that are sort of top of mind for you that you're discussing with financial professionals, or do you usually stay more focused on just BTC and ETH with them, or like what's your perspective?
No, I look, we for the last 7 or 8 months, we've talked about the spot ETF ad nauseum, right? Like that's been so much of it. I
Yeah,
prefer to talk
rightfully
about,
so.
yeah, exactly. It's a big deal. I prefer to talk about use cases, and I prefer to talk about adoption. And I love talking about when someone launches an NFT project that is not really an NFT, not an NFT like we've seen in the past, but here's how I'm going to use the technology. I love talking about that with advisors. I love talking about wallets and custody and how different that's going to be. Um, so that those types of things are, well, I'll say it this way. I like that because if I go back to my internet analogy, the reason why companies like Amazon and all that became so valuable and popular is because people used the internet, not because a lot of people bought Amazon stock.
Exactly.
Right. There have been more millionaires created with people utilizing Amazon as a platform to build their business than people who invested in Amazon and just held it for the last 25 years. Right.
Exactly.
So that's why I'm a lot more excited about it. I'm a lot more excited to talk about those things.
Now, one thing I'd be interested to get your perspective on is when you're talking to financial professionals that maybe are, speaking to clients that are involved in crypto and crypto native, do they ever hit any roadblocks with like tax issues with them? Because I see just basically, a large percentage of people without their accounting or even taxes done sometimes are done inaccurately. And does that ever become a roadblock when you're trying to understand what their cost basis is and, do an analysis on their overall portfolio? Or is that sort of been a bridge you've not really crossed yet or have seen?
Well, I obviously don't give tax advice because I'm not a CPA, right? But we get a lot of those questions, right? What's the tax implication? And we've had to talk about it in relation to owning crypto, and of course, there's tax loss harvesting is a big one that because it's treated as property, you can harvest your losses without a wash sale. We've had to talk about taxes in relation to the ETFs, how your taxation of the ETF is different than your taxation of just owning Bitcoin. Whether you sell or not, if you just hold the ETF, you might actually get a 1099 and have to pay taxes on it, even though you did nothing but hold it, which seems
It's always
odd.
a surprise tax with crypto.
What do I think was historically?
Are what drive the value eventually. Right now, it's a lot of speculation. It's a lot of, or is this going to go into an ETF versus are people going to use this? And therefore, is there demand for ETH because more people are using the Ethereum blockchain to process their mileage plus frequent flyer program on top of Ethereum? Right. So I think that's where we're going to see so many more actual use cases. We're probably going to see a lot more tokenization of assets. Larry Fink has already talked about it. You know this well. More and more companies are looking at that, whether it's real estate or private funds. I think we're going to see a time in the near future where more people, whether it's advisors or anyone else, is going to understand the adoption of Web3 and crypto a lot better than they do now and realize it's not just about owning Bitcoin and ETH in a portfolio.
Absolutely. I think it's all about use cases and emerging sectors. Like you said, are there any others that are sort of top of mind for you that you're discussing with financial professionals, or do you usually stay more focused on just BTC and ETH with them, or like what's your perspective?
No, we for the last 7 or 8 months, we've talked about the spot ETF ad nauseum, right? Like that's been so much of it. I prefer to talk about, yeah, exactly. It's a big deal. I prefer to talk about use cases and I prefer to talk about adoption. And I love talking about when someone launches an NFT project that is not really an NFT, not an NFT like we've seen in the past, but here's how I'm going to use the technology. I love talking about that with advisors. I love talking about wallets and custody and how different that's going to be. So that those types of things are, well, I'll say it this way. I like that because if I go back to my internet analogy, the reason why companies like Amazon and all that became so valuable and popular is because people used the internet, not because a lot of people bought Amazon stock.
Exactly.
Right. There have been more millionaires created with people utilizing Amazon as a platform to build their business than people who invested in Amazon and just held it for the last 25 years.
Exactly.
Right? So that's why I'm a lot more excited about it. I'm a lot more excited to talk about those things.
Now, one thing I'd be interested to get your perspective on is when you're talking to financial professionals that maybe are, speaking to clients that are involved in crypto and crypto native, do they ever hit any roadblocks with like tax issues with them? Because, I see just basically, a large percentage of people without their accounting or even taxes done sometimes are done inaccurately. And does that ever become a roadblock when you're trying to understand what their cost basis is and, do an analysis on their overall portfolio? Or is that sort of been a bridge you've not really crossed yet or have seen?
Well, I obviously don't give tax advice because I'm not a CPA, right? But we get a lot of those questions, right? What's the tax implication? And we've had to talk about it in relation to owning crypto. And of course, there's tax loss harvesting is a big one that you can, because it's treated as property, you can harvest your losses. without a wash sale. We've had to talk about taxes in relation to the ETFs, how your taxation of the ETF is different than your taxation of just owning Bitcoin, whether you sell or not. If you just hold the ETF, you might actually get a 1099 and have to pay taxes on it, even though you did nothing but hold it, which seems
always
odd.
a surprise tax with crypto, regardless.
Yeah, there's always a surprise tax. People ask me sometimes about the taxes of staking ETH, the taxes of staking other tokens, the taxes, potentially of airdrops, but most financial advisors are not. They don't have clients that are getting airdrops and asking them about it. So it is a lot about.
We'll see how this year goes with the airdrops.
Yeah, it might be a little bit differently, man. Like I've seen I've seen a lot more Lamborghinis in the area, and I'm wondering if that's from some of those newer Solana airdrops that have been hit recently. But no, there's always questions about taxation, and most of it is around trading, or most of it is around capital gains tax, and those are most of the questions we get. I think in the near future there will be more questions about from people earning some sort of income in crypto. Where does that fit in? Staking ETH, I think, is one that's getting to be bigger. People maybe who don't even know much about it, but they bought ETH on Coinbase and then they staked it on Coinbase, and now they got to go, okay, where does this fit in terms of my taxes? And that's where I go running to guys like you and go, you tell me, or you tell them, here, go talk to Patrick, because he has not only does he have the answer, but he can help you do your taxes. So those are the kind of questions that I kind of know the answers to, but I don't have enough tax background to go really in depth, or go, or what you guys have probably seen is we can, I don't want to say guess, but we can make a very, very educated guess as to how to tax this, because the IRS hasn't necessarily come out and said, this is exactly how you tax, an airdrop, or this is exactly how you tax this airdrop or this staking protocol or something. So you all have to, kind of do your best to make sure that your clients are paying taxes in the right way. And that's what I tell people. Don't not pay. Don't pretend you didn't invest in crypto. File something, do something, make an effort, because my opinion is the IRS wants to see that you made an effort. Quite honestly, they don't really know how to tax it either. Like, they don't know how it should be taxed. And so if you've made the effort, then that goes a really long way. The IRS will know if you own crypto, whether you put it on your 1040 or not. They're going to know it. Don't try to avoid it. Tell your CPA about it. Make sure that they have your accounts. Coinbase or whoever you use is probably going to send you a 1099, or you can request it. There's plenty of software out there that can help you out with it. So please don't forget to pay your taxes, because what we don't want is people, making money or earning money in crypto, or earning because they bought at the right time and sold at the right time, and then getting hauled into audits, or getting fined, or worse, something, right? Yeah. Because they didn't pay taxes on probably a relatively small amount of crypto earnings, when it would have been just as easy to just report it, pay your taxes on it, and move on. And the other thing we tell people, again, I'm not giving tax advice, but whether you're trading it, or if you bought and sold and you made some money, don't forget to put something away to pay your taxes. You don't want to come to April 15th and go, man, I owe taxes and I don't have any cash to pay it, because then then as a financial advisor, you get into all sorts of debt situations that you didn't want to be in anyway. It's a mess. I mean, I know people in crypto that owe hundreds of thousands of dollars in taxes and don't have it, because by the time they got out of those assets, they weren't worth anything. Just like we know people probably that back in 2020 were trading options on Robinhood, right? And made and lost. I have a friend who made $1 million, lost $1 million, and owed like $160,000 in taxes that he didn't have anymore.
Yeah.
So look, taxes, you're going to have to pay them. As I say, like, it's never your money till you've paid taxes on it. You got to pay the government to get access to your money.
Absolutely. I've seen, people leaving their tax payments in the market during a bull run, just painfully regretting it when the bear market rolls around right before tax season. And, like you said, they either can't pay their taxes, or they're stuck liquidating maybe double their portfolio than they would have if they would have just been putting taxes aside in a timely manner and estimated their taxes. So that is one huge issue. Another one I see is that even for loss harvesting and some of these planning that you may even want to do with financial professionals, you need updated cost basis information, and it also needs to be accurate. And that is another thing that goes overlooked. And what you're saying about just wanting to be in compliance, I think is really highlighted now, because this has been something that we've both been preaching for years, is compliance. But I just posted about this just in the past week or so. The DOJ posted that there's someone in Texas that they're indicting who for each count it's like 3 to 4 years in jail, who basically fraudulently filed 4 years worth of tax returns and then went out and tried to buy like a $3 or $4 million home, and now is basically getting audited and indicted. So I think 2024 is going to be potentially the year where we're going to see a lot more tax enforcement from the IRS, and also criminal tax enforcement. They've even indicated that themselves in 2023 a few times via some of their spokespeople. So it's going to be an interesting year for tax enforcement. Right now on the IRS's website, they are claiming there's a 75% non-compliance rate, and that only 25% of people are compliant. And they're saying that that's based off of all the data they've collected over the years, via John Doe audits and other information sharing agreements they have with other countries and 1099s. And basically, they've been doing a lot of data gathering over the years. So it's going to be interesting to see what comes on the tax enforcement front here on the future.
And real quick, Patrick, keep in mind for anyone who's going to do that, right? Anyone who's going to sell crypto and you've made a profit on it, know that you're going to be taxed on that, or that's a taxable gain. And if you want to put some of it away, the great part now is you can earn 5% on whatever you put away while you're waiting till next April to pay your taxes. Exactly. Right. In the past, like the interest rates were so low, you couldn't do anything. You're just like, oh, I'm going to put my cash away and earn nothing with it. But now you can earn like 5 or 6% relatively risk-free on your money, waiting to pay your taxes. And if you end up owing less, great, you've earned some interest on that money. So again, like if you sell and you make a $10,000 gain, put away $2,500 of it and earn 5% on it until you have to pay your taxes. And sorry, that's just part of what you have to do. Just like when you earn a salary, part of your money goes to pay the IRS for now, until such time as you file your taxes, and then you figure out exactly what you owe. It's not any different. You're just having to put it away yourself.
Yeah, you got to be responsible, and you got to think long term in terms of how you're building wealth. You don't want to seek some short term gain of avoiding taxes just to have it come bite you in the future, because it is a long term process to build true wealth. So you don't want to seek these short term things. But I also think one of the problems with the whole tax situation is education, because a lot of people just aren't understanding when their taxable events are occurring, or the fact that they are even sometimes exposing their tax liabilities to the market in terms of the validity risk, because they're not really keeping their accounting up to date. So a lot of it goes back to education on both sides, whether you're just looking at it from a financial perspective or a tax perspective. So tell me a little bit more about Interaxis and how people can get involved with that. Can you give us the website, and just give us, I know you went over it a little bit, but just real briefly sort of give us an overview on the value proposition to financial advisors, some of the focus areas, and what all you guys are doing over there.
So at interaxis.io, interaxis.io is where you can see our courses that we have available that are specifically for financial advisors. And most of those most of those come with continuing education credits. So if you're a CFP, CIMA, CPA even, you can get continuing education credits for taking those courses. There you can sign up for our newsletter, which we send out maybe a couple times a week, one of them being kind of a week in review, and the others being just like, here's one topic that's pertinent and most important, how it pertains to you, the financial advisor, not just what it is in general, but how it pertains to you, the financial advisor. You can follow me on Twitter at Interaxis8, the number 8. I'm also on LinkedIn. It's my name, Adam Blumberg. And I'm the guy who looks very much like this on LinkedIn, and we're posting stuff all the time. So those are the best ways to keep up and keep in touch. If you find us on Twitter or LinkedIn, you'll be able to find everything else.
Awesome. Well, I really appreciate you having coming on here today and speaking with us. It was an insightful conversation, and I love what you guys are doing over at Interaxis. So I encourage everyone to go check out interaxis.io or go visit Adam's LinkedIn or Twitter. He's very active over there as well, and I know you're always happy to speak with other professionals. So everyone go and check that out. You'll get a lot of value out of it. To everyone that has been watching today, I appreciate you watching this episode, and I hope that you did gain value from it. Until next time, I'm Patrick Camuso, signing off.